All right, Keith, Lerner, set us up here. We got the Fed decision. We got some key earnings as we know. How do you think?
Yeah, well, I think Mike summed it up well. I think I wouldn't be, overly focused just on tomorrow, even though there could be a knee-jerk reaction. The important thing is, historically, when the Fed cuts rates and markets are near all-time highs, a year later, the market has been up about 93% of the time. Go back to the mid-90s, 97, 98. The Fed stayed on hold at 550 for over a year. The S&P was up 50%. I think more important will be those earnings, especially when you see Oracle that's been hit quite a bit. A lot of questions around the AI trade. So I do think the earnings on the tech side will be probably as important as the Fed, or even more important given the weight in the S&P 500.
Yep. Hawkish cut tomorrow. Does that derail hopes of something between now and the end of the year in this equity market?
I don't think so. I think this market has been fairly resilient. We're taking a little bit of a pause, a little bit of sloppy trading here. But I think ultimately, when we see strong gains heading into the last part of the year, the last few weeks, we should still see some further gains in our view. And I think next year we're still setting up for more upside. We're going into the fourth year of the bull market. Typically, those are years we see gains. It won't be a straight line. We have midterm elections to worry about as well. But it all comes down to earnings, Scott. And we think the earnings next year will be low double digits. And that should be able to allow us to kind of move forward for this overall market.